So the question is, what is a debt ratio and how is it calculated? The first thing that's important to understand is that debt ratios are calculated based upon gross income, not net. Gross income is the income before deductions, your taxes, your insurances, your 401k. That number will be calculated with two different debt ratios. They have a top one and a bottom. The top one is the housing ratio, and the bottom one is the total consumer debt. Now, this is how it works. You take your new house payment. Some people say, you mean my rent or my house payment right now? No, this is your projected. If it's your refinance, it's going to be what your house payment will be. If you're buying a home, it's the new house payment. That becomes the housing ratio. And whatever rents you've had or things, that will be gone because you're moving. So we take the house payment and divide it into the monthly gross income, and that's a percentage. Now that percentage, what is it that's required? It depends on your loan product. Remember, the most important thing in all this is the little asterisk on the bottom that says, well, it depends. It depends on you and your situation. It depends on your product. But generally speaking, that housing ratio should be in the neighborhood of 31% on a maximum, sometimes up to 40%. That's kind of the ballpark. Now, why does it change? Bigger the down payment, the better the credit score, the different loan product will allow you for more flexibility. Okay? And then you take your new house payment plus all other consumer debts. The total will be your house payment, car payments, credit card, minimum due payments, department stores. It does include child support and alimony. It does not include car insurance, not your cell phone. It's just stuff that shows up on a credit report or some sort of legal document like a divorce decree. We take that, total it up, and divide it by your gross monthly income. And we have one on the top as a housing ratio and one on the bottom as your total debt ratio. That total debt ratio probably shouldn't be more than 45%. Again, that depends. Between 35 and 45%. There are some flexibilities and variations to that, but that's generally speaking, as far as you preparing for a loan, the numbers to look forward to on a debt ratio. But again, your situation is unique, so I look forward to your questions to make sure we can discuss your case.